Ginger Addison here, President of Sage Wealth Strategies, your trusted financial advisor and insurance professional. We're going to talk today about Roth Conversions. You may be hearing more about these. Now, although they're not a new strategy, it is something that might be a good deal this year. And this is why. When I think about what is a good deal, I think about wanting to buy something that's on sale and at the lowest price. Well, doing a Roth conversion, if you have accounts that are in the market, you have qualified accounts in the market, like a traditional IRA or a 401k, some type of an account of that nature, it might be good because taxes right now are at the all-time lows. So they might be on sale. And as well as your accounts might be at a lower value or at a lower price, a lower cost to convert as we're talking about this. Now, before we get started, what is a Roth and why is it different? So in 1997, we have been given the option of having a Roth IRA. And the primary difference is the fact of how they're taxed. So your traditional IRA, 100% of everything coming out of that or a 401k is taxable income when you take withdrawals. But with a Roth, you're paying all the taxes up front. So in other words, you're not deducting any of those while you're contributing to a Roth. But when you pull money out of a Roth IRA, there are no taxes. Well, what does that mean if you're close to retirement or already retired? You can do a conversion. And what that means is you take your qualified accounts that you have, so your IRAs, your 401ks that are already in place, and you can convert that over into a Roth. Why might you want to consider it? Well, there's three different reasons I would like for you to consider today. Number one, if you think that you're going to be in a higher income tax bracket in the future, in other words, if you think that taxes are going to be going up or you'll have other taxable income in the future that's going to put you into a higher bracket, you may want to consider. Number two, you want to avoid taking required minimum distributions. There are no minimum distributions required on a Roth IRA because it is not a taxable account. So the IRS does not impose any kind of minimum distributions on that during your lifetime. Thirdly, if you want to leave tax-free assets to your heirs or your children, this may be a way that you can do that. So there's a couple of different things to consider. If you're ready to jump in and convert into a Roth, I want you to consider a couple of other things because there are some different things that you have to be aware of. Number one, there is a 5-year rule. So in other words, if you do a Roth conversion, then you can't take any withdrawals out of that account unless they'll possibly be subjected to either taxation or a 10% penalty. So make sure that this isn't money that you're going to need for the next 5 years. That's a big one. Number two, you may want to consider what will happen when you convert your traditional IRA is that because all of those funds are taxable, that's going to be reported on your taxable income for that year. There's a hint here is you might want to consider being able to pay that taxable burden out of separate accounts. So you don't want to take that taxable funds that you're converting over and pay it out of there. You want to look at a different account. That's usually the best way to do that. And in that vein, thirdly, what you want to consider is what will that increased income do to your tax return and how will it affect other types of strategies that you may have in place. So you may be subjected in that year to a Medicare surcharge. That might also affect the amount of your Social Security that's considered for taxation. And for those of you that still have children in a situation where they're in college or you're still filling out that FAFSA form every fall, it could increase your income and affect eligibility for certain income subjected loans and grants and things like that for the kids. So you may want to consider those things. As with any kind of strategizing with financial planning or with tax planning, you want to make sure that you speak with a professional so that you understand all the ins and outs and how it might affect you before you make these decisions, because oftentimes it's irreversible. So it's really important that you sit down and talk to somebody. That's what I'm here for. So give me a call if this is something you want more information about. Please feel free to schedule a time. We can talk about it over the phone. We can sit down and meet. We can talk about it during your annual review. Just some things that I want you to start thinking about and considering if you've heard it in other places, as well as the fact that if you have these conversations with colleagues or friends, neighbors, if there's anybody that you know that can benefit from this information, feel free to pass this video on. I am happy to provide this. I'm here to serve my community. I'm here to serve you. I want you to have the best retirement you possibly can and use all the different strategies that are available. I hope that you're doing well. We'll talk to you soon. Have a great day.